Hey, this is Jim. It's 9:36 a.m. in San Francisco, California on July the 16th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So first off, thanks again for all the well wishes and prayers for Barney. If you didn't see the note, he was attacked by a Rottweiler early Friday morning when my ex-wife was walking him. And he's currently has his back legs paralyzed. We visit him every day. He's up at UC Davis at the pet hospital, and we're hoping for the best. And it's just a process. You take it day by day, and you just hope for a return of feeling in some part of the leg. If you get the return of feeling, then the rehab process starts. But at least you have hope there. So anyway, again, thanks for the well wishes and prayers. So looking here at the AMC 5-minute chart, you guys know that yesterday I mentioned to you the key in my mind, and something really easy for everyone to track on their side, is pull up a 5-minute chart, take a look at this high that was posted on July the 8th, and then the intraday high that was posted on July the 10th. Shoot this downtrend line down off of that, and that when we break that sort of sets in motion this whole sequence of what will lead up to the buy signal, the next buy signal. And this just happens to be, in front of this big zone of strength that spans the next 2 weeks. I'm not going to give exact dates of the most bullish sessions that I think, but just in general, tomorrow starts to really open the window, then it gets progressively more bullish. So this is the vibration level based on the price break of this downtrend line that we're following. So again, if we get a tall green candle that closes at the top end of the range, that is our buy signal here. My only hesitation, even though if you take a look at this, this price thrust up on this gap move this morning would be the A, and this would be the B, C, D, E. So it's already had a complete vibration sequence if you focus just on this. But you guys know, if you follow me for a while, that I like to, as a timing element, in addition to the the waves of vibration above and below the vibration level, I like to look at this as a timing element. So I'm using a Fibonacci tool. I'm using time extension lines. And my point of origin is the top of where the trend line, point of origin for where this red downtrend line starts. And then my 100% point, I want to line up on where price breaks that downtrend line. So I'm going to drag the fib tool right here, and you see that lines up perfectly with this green arrow here. And then you can see right here this 38%, 38.2%. Okay. Realistically, I don't want to get too excited about a tall green candle move through this 536 vibration level. Let me get rid of this other box. Until and unless price has vibrated for 38.2% of the time that it took to move from the point of origin high on this particular trend line to the point of origin trend break. So I hope that's easy enough to understand. But you can basically see that it, theoretically, we could still be vibrating, and it would look pretty normal. We could still be vibrating at 7:45 in the morning on the 18th. So, a couple more days. That doesn't mean that sometimes you don't see very quick vibration sequence take place. And again, I will always take a buy signal. So if we were to get a tall green candle painting through 536 and closing upper end of the range, I would take that. If I wanted to enter new positions, new call positions, or new stock share positions. And then again, the rule is once you get the buy signal, meaning once you get the tall green 5-minute candle that paints through 536, closes upper end of the range, you look back, and your stop loss, you hide under the lowest of the vibration sequence lows. So in this case, again, Let me get rid of the fib timing element. So in this case, this big break up is your A, and then, this is your B, C, D, E, or we could count this as an A, this a B, C, D, E. But the bottom line is, anytime you move down through the vibration sequence, you just note the low. So here's a low, here's a low, here's a low. You wait until you have your D low, right? Because you're going to be buying the E, A, B, C, D, E, right? And then you hide below the lowest low. If this first B wave right here had moved all the way down to 527, and this was a higher high, it doesn't matter. You're going to hide below, stop loss, hide below the lowest low of the vibration sequence. So that's the way it works. Again, 536, you guys can see the small magenta line if you're new to the service. This is the genesis of sort of my hidden retest technique. Anytime there's a fast market price move that breaks through a trend line, either a downtrend line or an uptrend line, that leaves behind a hidden retest. In this case, you also left a price gap. So even studying Technical Analysis 101, people would have been looking into this runaway move this morning for a potential gap fill. But the mystery becomes, does the gap fill occur, a half a penny underneath that low, or does it move all the way down to, half a penny above this high right here? With our technique, we're given a specific price level within the gap to look for a gap fill. In this case, it was 536. So this is your A wave up again. This is your B wave down. We made contact. So that's your, hidden retest has been hit. And so then I changed the color of the line to yellow, meaning signifying that now it's vibration, whereas a magenta line in my work signifies a hidden retest level, just, for muscle memory purposes, to be able to glance up at a chart and know exactly, what it is I'm looking at and the significance of the price level. So again, we've gone through the complete vibration sequence in swings, in vibration. Timing wise, it could take a while. So what that means is that it's possible we get a false buy signal and that we move back down for more vibration. Even if that were to happen, that doesn't necessarily mean that even if we vibrate for 2 more days, that price is going to come down and take out the whatever low we formed during the vibration sequence prior to the buy signal. It just means that it is possible to make a lower low. Again, I'm basically not going to get all that bulled up even on a buy signal until we've successfully passed through the outer range of that 38% rule, because it leaves us susceptible to being stopped out, which in this case, this is such a tight range that, especially if you're trading shares, a 5 or 10 cent stop is nothing compared to the move we can catch if this stock takes off the way I think it can. So let's bounce over to the on balance volume. You guys know to look for a tall green candle closing at the upper end of the range, painting through that 536 level. This is the look at the daily bar chart with on balance volume. You guys know, if you've been around a while, I'll review it for new subscribers, but this thick red downtrend line is just simply a downtrend line over the old historic on balance volume highs for AMC dating all the way back to 2021. So then, of course, when Aaron diluted and went through all the rest of that, he decimated the setup. And what we were looking for at that point was, I was saying that if we're going to have some kind of a mini melt up, what will happen first is on balance volume will be able to move back up and not only recapture but bounce above the what in essence would be resistance. So if you imagine this yellow line being a price line as opposed to an indicator line, and treat the technicals the same way you would. So this thick red downtrend line was resistance. Resistance, once the yellow line breaks above it, becomes support. You move up, and here we are sort of wedging. Now, your first key, if you guys want to follow on balance volume and get a jump on the next, sort of what I believe will be a powerful move to the upside price-wise, is instead of waiting for a breakout above the old all-time high in on-balance volume, which was posted on May the 14th at $1,184,000,000 in on-balance volume, what you want to do is, again, treating this as a price chart and looking at a low, a move up, another low. You want to look for a breakout, right? That would be, if you were looking at a price chart, that would be, really encouraging technically. So here's the key on balance volume level you want to look at, in my opinion. It was posted on June 6th, and it's 1,050,753,038. Okay, you see that yellow line on balance volume start to move above there, and again, they tend to move and look a lot like price, so it wouldn't even be unusual to see on balance volume break above this June 6 high, pull back, sort of retest that on balance high, breakout, become support, move up, and then once we get above, if this is what's in the cards, once AMC gets above 1,184,000,000, call it 185, 1,185,000,000 on balance volume, that's when I would imagine you'd be back above the 1325 hidden retest level, and starting to move aggressively toward these two hidden retest levels above. If you guys have access to the anemoid terminal, you know that currently the weekly trigger is at $6.21. So obviously, if we're tracking BAM into this zone of strength that's coming up over the next 2 weeks, and we're going to attack the 1325 hidden retest level, we'll be well through that anemoid weekly trigger. And again, 621 this week, it will change next week, but it'll, in general, be around that level. So the important part there is that then if we were focusing strictly on the anemoid terminal, not paying any attention to BAM, or these hidden retest levels up here, or even the direction, the predicted direction here, anemoid would show price above the weekly trigger with a big air pocket all the way up to the monthly trigger, which I believe is sitting somewhere in the $50 to $60 level right now. So again, without focusing too much on exact price levels, it just in general, it's good news. And on a percentage gain basis, it's a big deal. Now, one of the things that I think is going to be a huge factor behind this actually working is that, I've had this forecast on the board for many, many months and talked about the July zone of strength. At that time, I was, if you guys know, if you're a Global Pro subscriber, I've been on and off very bearish the stock indexes. And then what we started to see is a change where I was bullish the Russell, bearish the NASDAQ. And right now, you can see today, and it's happened over the past several sessions, where the Russell 2000 has been very, very firm and looks like it wants to make a charge at the all-time highs and probably break through, whereas the NASDAQ is starting to look rough and be beat up really badly on certain days. So what the point here is that the Russell 2000 is a small cap index, and it can provide, whether or not a so-called meme stock is in that Russell basket or not, it can provide a lot of wind at the back for the meme stocks. So whether this is due to the perceived Fed interest rate policy, and capital is the lifeblood for small cap companies, whether that's being perceived that that's going to happen in the future, cost of capital is going to go down based on Fed policy, and help the small caps, or if it's sort of some short covering that's being forced through sector rotation out of big tech and into small caps. Either way, we don't care what the catalyst is. It could be a little bit of both of those, or one feeding the other. We don't care. But the main takeaway is that it's really encouraging that I'm seeing a potential mini melt up in the Russell 2000 small cap sector that's now lining up with this sort of mini melt up window that we've already had on the board for AMC and GME for multiple months. So always a good sign. So I'll wrap up there. But again, if there were just if there were two things I'd be looking at, number one would be this buy wilt candle buy signal painting through the 536 level if I'm really drilling down and want to nail the micro. And then if you're more of a swing trader or position trader and you're looking for help through some of my tools here, in addition to checking with your financial advisor, I would focus on this June 6 on balance volume high, 1,050,000,000 shares. You break above that, and I would imagine we'll be off to the races. That's it from my side. Thanks again for all the well wishes as far as Barney goes, and good luck, everybody.